Hey there, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial conclusions, and make your own financial decisions. This is Blockhead Traders for the week of September 22nd, 2024. And in this week's episode, I'm joined by fellow Blockhead Trader Viper XL 007. And today was the big day. I don't know, I always say it's a big day, but the Fed came out, the FOMC, and gave their rate lowering, I almost said hike, rate cut today. So we're going to talk a little bit about our good friend, Mr. Uncle Jerome, and what he's done to the market and what we might expect in the future. Additionally, we're going to take a visit on a SBUX trade of mine. It's coming up for expiration this Friday, and I'm going to discuss the to roll or not to roll on SBUX. And then Viper is going to bring us up to date on some Bitcoin action, and I'm real curious to see if our good old friend, Mr. Uncle Jerome, had any impact to the Bitcoin market here today. But before we hop to that, I want to give a shout out to our Discord, a link in the description below. You can hop in there, say hello to myself, Viper, some of the other Blockhead traders. Love to hear what you are trading, love to hear what type of content you want to hear about. You'll also find a link to thetagang.com/Sprocket888, where I post each and every one of my equity trades, the good, the bad, and the ugly. Last, this is available in an audio-only format wherever you get your podcasts. So find us there and subscribe, and if you can't find us, let us know and we will get it there. But let's hop to this week's content. Viper, today was the day that if you're not a trader, you probably are like, well, it was just any other Wednesday. But if you happen to be a trader, it was Fed Day. And that's probably something that most people will be like, what the heck is Fed Day? But periodically throughout the year, the FOMC meets and kind of sets direction on the federal funds lending rate. And the big talk is that inflation might possibly be somewhat under control. And there was a lot of anticipation that Jerome Powell was going to cut interest rates today. And there was a debate, almost a 50-50 toss-up. I think it was slightly in favor, 60-40, something like that was the probability that people were saying. To go between a 25 basis point cut and a 50 basis point cut. And for that, basis point is really just like a fraction of, or a penny. So a 25 basis point cut is a 0.25% rate cut. We ended up with a 0.5% rate cut. And to be honest, the news came out at 2:30 p.m. That's when the data was kind of released, or the press conference started, and the market really just kind of took off to the races there. I mean, like seriously pulling. I didn't really monitor super close, but I did look down at the Russell, I think, at one point, and the Russell was up like 2.5% after the announcement. And, but then by the end of the day, I was kind of coming home, and it was probably, 4:30, 5 o'clock. And I looked and I'm like, wow, Russell kind of finished just 0.25% up. That's interesting. And then I kind of looked back at the chart, and there was quite the big pullback after, going into the close of there. So I'll be real interested to see how the next 2 trading days trade. One thing I have noticed, Viper, is when it comes to Fed Day and the announcement, a lot of times the initial reaction doesn't always seem to be the one that the market sticks with. And so I'm real curious how this will kind of play out, because there was a lot of controversy around the 0.5%. Was that going to be too aggressive? A lot of people said, oh, it's needed. The Fed is already behind the ball. And then other people said, but if they cut by 0.5%, then the market's going to wonder, what do they see that we don't see? And so, I don't know. They really, I think at the end of the day, it was kind of I don't know how to take it. But what was your impression?
I mean, ultimately the same of, I don't know how to take it. And that just speaks to what we're doing here on your fellow Blockhead Traders YouTube channel, and that's learning as we go. And this is certainly one of those things that, let's see, we got started, as rates were bottoming 0. And then, so we've actually gone through a full cycle of hikes, and now the first cut. And I still don't know exactly what to make of it as far as the mechanics of what the rate means, as far as the influences of, well, if you raise it or you hold it too long, and risks of stagflation, or I know of those things, but don't have any deep thoughts on that. But very, very globally, macro level, I have followed the general thought process of I was on board the train thinking that July was going to be our first cut, and then it was 25 basis points, and then we'd get another cut in the fall here. So and that was just based on, just like I said, very high level, the fact that around the world other countries were already cutting rates as early as I think May, somewhere back there. So just what I've learned as far as global liquidity goes and all of that sort of thing, I expected us to be right in line with everybody else. So from that perspective, I guess you could say I'm in the thought we were delayed camp, and therefore that the 50 basis points made sense because, like I said, I was expecting a July small cut. So that's about all the thoughts I had. And I mean, it did feel like at least a tiny piece of it was confirmed. Maybe not confirmed, but affirmed in the announcement, in the press conference. Jerome was asked about the July meeting, the lack of a cut back then. He kind of reworded the question and said, if you're asking, had we gotten the jobs report before the FOMC meeting in July, would we have cut rates? And he said, I don't know, maybe, probably, something along those lines. So that was enough that I was like, see, I knew it. We should have got a cut back. So I felt like today was catching up in that regard, but I certainly yield to any smarter minds that, are worried about 50 being too strong and any negative impact that would have. I don't have any thoughts in that direction.
Yeah, I don't think we either. In fact, actually last night in the Discord there was quite a back and forth about, hey, what might happen? What's this mean? Is the market going to take it? Is it going to go up? Is it going to go down? Is a quarter point too much? Is a half a point too much? And it was kind of comical because in the end of the whole discussion I said, you know what? I really don't care. I just want volatility to come back and sell the volatility up, down, left, right. I don't really care. And ironically, the VIX, which is a measure of volatility, actually ended the day a good bit higher than it began the day. That is of particular note to me because typically when you have a binary event, the volatility in the market will evaporate. Whether that binary event is a drug release, test release from a pharmaceutical company, an earnings release from any other company where that volatility kind of pumps and pumps and pumps. And as soon as that binary event is out, it deflates like crazy. And FOMC meetings are very much a binary event where volatility does pump up into those events. But it did not contract after this announcement. In fact, it actually expanded. So I thought that was super curious. So Viper, I know you don't really pay as much attention to the equity markets as you do the crypto markets. So was there anything going on in the crypto markets while all the news and stuff was happening around the equity markets and the rate cuts?
There was. I mean, so there were a couple things that were going on. I actually had already started to make a trade. I've been, again, as I talk about all the time, I'm focusing very heavily in the gym, quote unquote, working on that price action awareness and charting. And going into today, I had a trade fully scoped out, a high time frame trade, which we can walk through here in just a second. And it was going really well. And I knew that I was risking treacherous waters because it was FOMC day. And I think there's some nuance to that we can kind of walk through here. So instead of waxing poetic about it in the abstract, let's just dive in here and take a look at what the setup was that I saw as far as the trade that I took. And then, so I've rewound the chart a little bit here. So we're looking at the chart rewound to yesterday, late in the evening. So a couple things that I've picked up on price action recently. I'm going to, again, go through it pretty quickly, not really explain it, but absolutely would love to double click on it, hop in the Discord, or just leave a comment, let us know you want to double click on the price action thing, and we'll get into it a little bit more. So the thing is, to determine the direction of the price action of a trend, and what to be trading, what we want to do is take a local move, kind of like we're looking at right here, and you just want to drop a line here at the very, very bottom. Let me make this line just a little bit better, make it a little thicker here. And then let me zoom in on the chart a little bit to make this easier. And then you want to drop a line at the move that made that lowest low. And so we can kind of see this little cluster of candles here. There was a move down, we came up, and then down again. So we want to mark the bottom of that move like that. So this gives us, because clearly we were in a downtrend approaching this area. Once you make the low, you tag that, and this range represents the potential reversal on the chart. And so sure enough, as time goes forward here, price already made this low here. So that, let's say we were looking at this, somewhere around here, price comes up, gains the range, and then we come back down and test the range. Once you gain the range, having an entry, a limit order entry for a long sitting here on the top of this range, that's your clean reversal entry. That's the one you always want to look for when you want to swing trade. You want to look for a reversal of trend and then plop that limit order on confirmation of the reversal. And this wick right here, that's your guy. That's the one. Like I said, you gain this, and then once it's gained, put that limit order in there and just wait and see what happens. So obviously I didn't catch that. That was just part of, what I was doing to set up the confirmation of trend reversal. So being in this uptrend here. So the best way, in my opinion, so now we fast forward to late last night or yesterday evening, and I'm looking for the trade. And the best way to mark continuation of the trend or a reversal potential is, now we're looking at the top of the little trend here. Obviously, you can mark it, looking at the chart this way, but in my opinion, it's a lot easier to do the old flip-a-doozy and flip the chart over. And, just for some reason, this just makes it so much easier to spot. We have that long bias in our minds. So boom, same exact idea. Mark the very low, mark the swing, how we went up and then down. So mark the bottom of that. So this is how I started to set up my play here. I said, all right, we are in, I'll flip it back over, even though that technically doesn't matter. We are in this trend direction here, up, as the chart is currently oriented. If we are going to continue the trend, then we need to gain this range, come back down, and do a little taggy tag here, and then get out of here. And so that would be, if at this point I don't have a trade on, I'm looking for an entry. So that is entry number one I'm looking for, is the continuation entry. However, there's always a potential for a trend reversal. So if we flip the chart over, because I think it's just a tiny smidge easier to spot, what we can see here is, so we tagged that, and we did gain that. So now all of a sudden I'm in that mindset of, I want to enter either on continuation confirmation or reversal confirmation. So playing forward just a couple more candles here. And we had this gain, and then it came back down. And so I had actually taken a short. Once it gained there, I put my entry up here. I put my stop loss somewhere right around here. And I had my profit target. I was able to pull off a 4-to-1 on the estimate here. So let me make that actually look like a short. And so this was the setup that I had. you can see we kind of came up, we teased my stop loss, but then we came down, got into profit here. And if I play the chart out to modern day here, it didn't work out. Wah, wah. So I had the profit target set down here because, again, the same exact idea: mark the low, mark the swing that took you to the low. And so if this was going to reverse, it was most likely going to test this 58,600 level here, because that would be the next move of the reversal. So it was a pretty fundamental clean setup. It just didn't work out. But I did take, so now this tying it back into the FOMC, I knew that was happening today. And like I said, waters get choppy. We've always maintained, and I still maintain, news is noise, and it doesn't affect the trend. But the waters get choppy. And so I knew going into having an open position, going into this news event was a risk for those choppy waters. And the reason being, because if you look at where I had my stop loss here, I was up here. My entry was here, and taking this just to the hourly, just so we have a little more data on the chart. You know, we were starting to pull back up here the hour before the press conference, the announcement and whatnot. So even though trend continues or whatnot, I wanted to make sure that I de-risked the position for exactly what happened, which was a volatile move against me, against the position. So I did take some profits here, and then I moved my stop loss to entry because you never know what's going to happen. Trend remains the same, but there can be some wild, that volatility Sprocket's talking about, there can be some wild swings. This was actually a pretty tame one. There's been FOMC meetings, news events where you get this massive, insanely huge wick and then this tiny pancake of a candle. And it's just because that volatility just goes nuts, and it just wreaks havoc on stop losses, liquidations, and all that stuff. So I didn't want to play in the risky waters. I left the play open, but like I said, I brought it down to where I was going to get out no matter what at somewhat of a profit. So what ended up happening, like I said, we got this crazy volatile wick up. My original play actually held beautifully because we didn't break this level here. Like I said, this range up here, let me get rid of the bottom range just so it's a little clearer to see. Like I said, continuation was breaking this top range and then testing it before going on. So the news event didn't actually break the trade that was on. It came up and it tested the top of the range, and we rejected off of it. And you can see that it even came down here. But later on in the day, as of before we started recording this, you can see it came down, found some support, and continued on up. And now it has gained it. And now the trade is now on that continuation aspect. So the trade I set out to make didn't happen. But I was trying to scalp a counter trend move. The trend has always been up in the most recent time frame. So here we are live looking at what is exactly what I was talking about, where there is 100% a long potential trade to be had, which I have a limit order sitting in for this exact thing, because this is that continuation move that I was talking about, where we scoped out this range. Now it's gained the range, and it gained it quite handsomely, but that doesn't matter. And now it's pulling back. And so somewhere around, I forget exactly where it is. I think I did 61,500 is the limit order for my long position. And so I'll get that. Well, I don't know if I'll get it, but I'll leave it there, and we'll update this next time, I guess, to see how it worked out. But throwing a lot at it really fast, but that's just the thinking behind identify your trend, and most importantly, identify the reversal criteria of that trend, and try to, ideally you only want to enter on the reversal. If you missed the trend and there's a confirmation move, you could take a small play perhaps, but the big wins, and we'll call them the easy wins, are when you take the trade on the reversal move in the direction of the reversal. And that goes back to what we always talk about with giving yourself the highest probability of success. Because there's so many factors that can go wrong, so many factors that can be stacked against you. And if you're taking a confirmation trade, there's nothing that says how long that continuation trade. There's nothing that says how many times we're going to do that continuation move. It could absolutely work out if the trend is strong, but putting those odds in your favor with the confirmation of a reversal means that you should statistically I'm carefully use the word guaranteed a leg up on that reversal move, which is that statistical probability in your favor. So this continuation move long that I'm going to take, that goes to that thinking that it's not the best, but it's an entry and it's a solid, well thought out entry. But the fact of getting the entry, if I get it, where I get it, I can keep a stop loss really tight because it shouldn't threaten the stop loss. And that's really how you get lots of good, consistent wins, because you get the good entry, which allows you to get a tight stop loss, which mitigates your loss risk and put those probability odds in your favor. So in a roundabout way, that's what I'm up to. And the impact or somewhat lack thereof of the FOMC meeting, as is the usual, where sure, things got volatile, and similar to your thirst for that volatility sprocket, I did spend the afternoon post meeting scalping the 3-minute time frame very successfully, using everything I just talked about. You just do it on smaller candles, but because that volatility was there, that liquidity was flowing, I didn't care which direction it was going. It was just showing some beautiful textbook price action, and so I was able to scalp it rapidly and get in some good wins. So I'm all for that volatility too. Either way is fine. Keep the candles flowing. That's all we need.
Yep. And the key that you kind of mentioned there, or the secret that I think is the most important piece, is your risk mitigation. So, he who controls his risk probably is going to be the one that's going to come out the biggest winner. But Viper, I wanted to touch on a trade that's been kind of going for a little while on my books, and I'm coming up to an expiration here this Friday, so 2 days away. And I want to really pose the question, to roll or not to roll. So, we've talked about the wheel strategy here before, where you sell a naked put to collect the premium, and you have to be okay with assignment. And sometimes you get assigned, and when you hold the shares and you sell premium against it to get them called away from you. Well, that happened to me on SBUX. We've covered this several different episodes. I've touched on this trade, and we are coming up to an expiration here this Friday. And this is where you would normally be considered, hey, is it time to roll this trade or not roll this trade? And so I want to just take you into a little bit of the thought process that I have got going on here. And what am I going to do come tomorrow and Friday? So to recap, I brought up basically the history of this trade. This trade started as an earnings trade, an earnings strangle back in April. And, I'm not going to read through everything here, but you can see all of the different events that occurred and the premium that I had collected, including dividend. So as a shareholder, one of the nice things that you get is the stock dividend. And so I was able to also collect a dividend as well as all of this premium. So the most recent thing that I sold was in mid-August. I sold about a 30-day out expiration for the $90 call strike for SBUX. Now, I was assigned, you can see, at $83. So this is $7 above the cost basis of my assignment. Now, it's not my true cost basis because I had collected premium, so my cost basis is actually below that $83. However, I went ahead and sold it, and in the process, SBUX has rocketed from there. I think today we were around $95, $96. So the probability that we are going to be above 90 by Friday is incredibly high. And that begs the question, should I roll this forward? Because you can always roll options forward for a credit as long as you kind of keep the price the same. There's one tiny corner case that rarely happens. So technically there's one case that doesn't, but 98% of the time you can roll for a profit. And so far, to recap here, I have gotten about a 61% return on my capital. Okay, so I've collected $3,500, $3,520 in premium and dividends and all of that, plus the difference in the strike price. So that is a return on about $5,800 in buying power. And if you divide that out over the 5 months that I've held it, because you could say, well, you had to hold it for 5 months. And I'm like, that's still over a 12% return each month. So I think that's pretty stinking good for $5,800. So why not keep a good thing going? And here is my logic here that I've kind of put out in some text. And to roll this $90 strike, because Starbucks is trading so high, around $95, $96, it will only get me about 90 cents per contract. So $90. So $180 is what I would get if I rolled this forward about a month to basically the next monthly expiration. So how much additional premium is that? That's $180 out of $5,800. That's about a 3% return. Okay, but that's still pretty good for a monthly return on something. Like, that's not too shabby. But I wanted to basically say, okay, well, what else could I do with that $5,800? And I did a quick scan. I'm not necessarily going to take this trade, but to give you where my head is at, Discover Financial is in elevated volatility right now. And that's something I would sell premium on. And so I look to say, okay, what would I sell? Well, I normally sell about a 25 delta, which happens to be a $125 strike on DFS, collecting $260 a contract. So let's size it up to as close as I can to $5,800 in buying power. Well, that's about 3 contracts. So I could sell 3 contracts at $2.60 to consume about $5,600 in buying power. Well, what's that work out to? That works out to about a 14% return on capital. 780 divided by 5,800. That's 4.5 times better as far as capital efficiency than rolling the $90 Starbucks. And coincidentally, I looked at the chart on Discover and I said, actually, this is one where I would play a strangle and add a topside call. Well, you throw in a topside call and the buying power does increase a little bit. So I've technically gone over budget a little bit at $6,100, but I'm collecting 3 425 premiums, a 21% return potential on capital. And so this logic right here is what's going through my head. And in this point, it's not really worth it to me to hold and tie up that buying power in Discover simply to eke out another $180. I can use a more efficient use of the capital by letting that option expire on Friday. Those shares will get called away from me. I'll book all of my profits, as I previously mentioned in the slide before this. Booking a $3,500 gain net over the whole life of the trade, and I can then take that buying power and deploy it somewhere else in the market to potentially get a better return.
So what you're saying is you had options.
Absolutely, you do. and honestly, something I would normally do, and this is one where I don't know if it's right or wrong, but if it was the flip side, right, and I was actually underwater, I might actually roll just to kind of keep the dream alive and bring that thing back to green. But because I'm already so green, I'm like, it's time to move on to a different field.
Yeah, absolutely. And I mean, it's like, still, even though I've made it known that I still struggle with options trading, certainly at this level, like I get the theory and whatnot. It's just a pure mental mechanics, mental focus that I struggle with, because there is a lot of mentality differences between trading and doing these options, despite the Venn diagram overlaps. But I mean, this kind of setup here is exactly what is so attractive about, if you really dig in, like you have, of like this is your bread and butter. This is your strategy, because there is an extreme amount of control you can exert over the outcome of the position. That doesn't mean it's a guaranteed win or anything like that, but it means you got options. You can continue to work it. You can do the wheel. You can roll it. You can, it's like working with dough. You can actually massage it and knead it and make it do cool things, which is certainly pretty spiffy.
Yeah, for sure, Viper. It's, I don't know, something I really, really like. And hey, there's an off chance that the market will just start dumping tomorrow and Friday, and maybe old Starbucks will find itself either closer to $90 or below $90, and I will reevaluate because if Starbucks is really right at the money, rolling forward another month, the premium picture will be totally different. Like I said, the 90 cents is only there right now because it's so deep in the money. But any sort of massive event before that, as long as nobody early assigns me, could really change my calculus. And, I just kind of wanted to talk people through what goes through your head. How do you know if you should roll? Should you just keep rolling forever? And that's my thought process. Is I always look at the capital that we have tied up and I say, okay, is there a better use of this capital somewhere? If yes, then maybe I don't roll. If no, then let's keep it rolling and keep going. So, and we got a little bit of the Jerome Powell in here and the price action where, as you kind of pointed out, yep, news causes a little bit of chop in the charts, but it really doesn't change the trend. You go back to that thing we always say is that a binary event is merely a price action catalyst, being an accelerant into that price action. So hopefully you guys can find time to get out there and put your reps in the proverbial gym and make your charts, make your levels, see how it pans out. It's definitely something that only gets better with practice. Despite watching a million bazillion videos of ourselves doing this, really it only is going to sink in when you do it with your own brain and your own eyes. So hopefully you're finding something exciting out there to trade. The market is sure to head to volatility now that we're starting in the rate cutting cycle and we got elections coming up. And I'm just excited about the whole thing in general because volatility is a premium seller's dream. And that is my bread and butter that I like to do. So I'm looking forward to it. Hopefully you find something that you want to trade. Good luck out there. And remember, think outside the block.